Hi there. Thanks for tuning into the Mortgage Minute. Today, I want to discuss how long you can hold a rate for. And there are a few scenarios here, as the answer implies before. It depends on a few items. So, to start off with, 30 to 60 and even 45-day rate holds are quite prevalent in the past few years, particularly derived from the broker channel. So not a typical time frame you will see in the banking channel or the credit union channel, and mainly for the reason that these are heavily discounted interest rates. So even if you do have a pre-approval with the mortgage broker, they will in fact end up re-tendering your rate hold once your deal goes live, to always check if there's any 30 or 60-day specials out there. So as it implies here, this is a short time frame, usually for deep discounted rates, mostly available in the broker channel. And even in between that, I put in brackets or even more, or even for specified time periods. So for example, today it's November 1st, there could be a rate special going on till for the next 14 days or till the end of November. So sometimes a lender will come up with very specific time frame. 90 days, more common, and this is with all channels. When I say channels, I mean the banks, mortgage brokers, credit unions, and so on. So common standard, 90 days. Now we're going out to 120 days. This is typically the maximum rate hold that's offered for regular conventional type lending for residential homes. So banks, credit unions, and non-bank lenders as well. So 120 days. Anything greater than 120 days, anywhere from 6 months all the way to 2 years, you could probably expect that there will be some type of premium attached to that interest rate. So the rate will be higher, anywhere from 0.1% all the way to 0.5 to as much as an entire percent, depending on how long the rate hold is. At the end of the day, these are solely intended usually for new construction mortgages, and like I mentioned, the rate premiums are in effect for any scenario. Whenever you're dealing with a pre-approval and there's a rate hold involved or any mention of it, just be sure to ask your lender or your broker for complete details to specify how long that rate is held for. Other things to be aware of when requesting a rate hold: look out for rate premiums. This could be anywhere from 0.1% all the way to 1.5% of your contract rate, and typically you're going to see a rate premium attached to sometimes just for doing a rate hold. So for example, if today's best rate is 3.09% for a 5-year fixed, to hold that rate, many lenders will charge a premium right off the bat. So they may, instead of offering you 3.09 today, they may hold it for you for 4 months for 3.19, off putting a 10-point premium on there. Otherwise, be aware of rental properties, extended amortizations, stated income, and conventional lending as well. So those are all common and typical rate premium mortgage products. Point number 2 there: don't assume your rate hold will reset upon maturity. So always check in and follow up. For example, if you have a rate hold currently and your 3 or 4 month period has surpassed, don't assume that the lender will just automatically renew it and rehold it for another 3 or 4 months. Always follow up, check in with them, and inquire. As important as the rate is, make sure you are currently pre-approved. Many times people will receive a rate certificate, and that's excellent. You fulfill your first objective, and that is to reserve a rate for 3 or 4 months. But be cautious if you were not asked to provide any support documents like income verification or down payment confirmation, and any sort of support documentation, pay stubs, tax documents, you name it. If this is the case, this will be requested of you, definitely, no questions asked, when your deal becomes live. So heads up, if you do have a rate hold but you haven't provided any support documentation, you're heading down a path of uncertainty when your deal goes live, and typically there's a lot of unpleasant surprises that may arise. Ask your broker or banker to re-tender the application when your deal goes live. So even though you do have a rate hold today, let's say we have you 5-year fixed for 120 days at 3.09%. When your deal goes live, just check in, and your broker should do this for you regardless. But when the deal goes live, even though you do have a rate hold, we will re-tender your deal. So we're going to shop it out there again. And when I say shop, we're not going to pull your credit, and that's not necessary. We just look through our chart of lenders and their rate table, because there could in fact be a lower rate than the one that we have reserved for you. Be aware of the market trend. So right now we are in an upward trajectory as far as interest rates go, and also in a pretty volatile environment as far as government policies, which affect mortgage qualification and interest rates. So heads up, be aware that if you do have a 4-month rate hold and rates are going up, you're a little bit more under pressure perhaps. And maybe you want to be more on top of things and try to close your real estate transaction within your rate hold. It could be the difference of saving you thousands of dollars or putting you back thousands of dollars. So heads up on that. Just be aware. Please don't hesitate to reach out to me if you require more detail on anything that I discussed or any other mortgage related topic for that matter. I hope you found this content of value, and I encourage you to share it within your network. I'm Mark Ogello, and this is the Mortgage Minute.